Waiting too long to remove accommodation would be unwise, potentially requiring the FOMC to eventually raise rates rapidly, which could risk disrupting financial markets and pushing the economy into recession.
Depending on how the data continues to come in here, I would think that May or June would be likely for a potential rate hike. Bryson, Wells Fargo Securities. On Tuesday, Fed Chair Janet Yellen said they will likely need to raise interest rates at an upcoming meeting, as delaying could leave them behind the curve, resulting in quick rate hikes and a potential recession. What do you make of Janet Yellen's assessment, and when do you think the first rate hike of 2017 will be?
Well, I think what they're doing is they're putting the markets on notice that, definitely rate hikes are coming. Their next meeting is next month in March. I still think that's a little bit premature at this time. I mean, it looks like the economy is going to grow roughly 2% or so in the first quarter. So I don't know if growth is strong enough to get them to move in March. But the next one is in May, and then there's one in June. And so I would think either, depending on how the data continue to come in here, I would think that, May or June would be likely for a potential rate hike, assuming that the economy, continues to grow at a pretty decent clip. But, there very well may be a member or two of the FOMC who in March, votes for a rate hike, and we'll just have to see how things develop. But again, they're definitely putting markets on notice that rate hikes are coming.
Also on Tuesday, we had January inflation figures out for the United Kingdom, which saw consumer prices rise by 1.8%. Rising fuel costs coupled with a weaker pound are set to push inflation above the Bank of England's target soon, with some economists forecasting it will hit 3% this year. What is your assessment of these figures?
Well, so we don't think we're going to actually get up to 3%, but I think 2.5% or so is likely in coming months. And everything else equal, that would want to have the Bank of England potentially start to be hiking rates by themselves. I think there's a few things, though, that to complicate that. First is, when you look at the core rate of inflation, so that's going to exclude, food and energy, which tend to be volatile, that's only about 1.5% right now. And so we're not, quite up to the 2% sort of range. I don't think we're going to get there anytime soon. Another thing that complicates it, and it ties into this core idea, is this week we saw wage inflation out of the UK, and that came in lower than expected. So we're not getting a lot of wage inflation, and everything else equal, that would cause the Bank of England to want to wait. And then thirdly, I mean, there are these uncertainties still about the Brexit. When Article 50 gets triggered, and what effects that will have as well. So we think that the Bank of England will be on hold largely through most of this year. But again, in general, the UK economy is performing better than people expected, and if that continues, I think maybe later this year you get a rate hike there. But I think it's still way too premature to assume that's going to happen anytime soon.
And China also released its January inflation figures, coming in at 2.5% year-on-year, slightly higher than anticipated. However, as strategist at Credit Suisse Group AG, Li Chen, attributed the growth to an uptick in spending for Lunar New Year period, and figures will settle in February. What are your thoughts?
Well, I do believe that you will see, I don't know how much was actually related to the Lunar New Year in and of itself. There are some base effect things going on here. That is, inflation in January of last year was very, very low. So it's easier to get a higher number off of that lower sort of base. And then, when you look at February of last year, we had an uptick in inflation. And so, the base effects are going to start to work the other way. So, I think what you will see is the overall inflation rate in China remain modest this year. The economy is growth has largely stabilized, but it's stabilized at a level that's or a rate that's been much lower than it has been in the past. And so I don't think we're going to see huge inflationary sorts of pressures there in China. And I think you're going to see roughly inflation rates there remain roughly where they are over the next quarter or two.
Thank you for your analysis on these events, Jay. Those were some of the key events to happen this week, although their impact will be ongoing. So if you want all the latest developments and analysis on the FX markets, don't go anywhere.